Hello. I sent you something. I sent you the financial statements of Apple. Did you receive them? Did you get them? Okay. Good, yeah. And the others also?
Yes.
So let's have a look at them, and then later I will ask you to analyze them. Yeah, to analyze the company. And I wanna know something about the profitability, about the financial position of the firm, and whether the firm buys back shares, whether the firm pays a dividend, and things like that. Yeah, but generally, if you look at the statements, if you open the statement, you have the first page is actually the income statement. Yeah, so this is the income statement. It says Apple calls it consolidated statement of operations. Yeah, but this is the income statement. I don't know why they call it statements of operations, but if you look at it, it starts with the sales, the net sales of products and services. Yeah, so this is the sales revenue that Apple is generating. How much? What are the products with which Apple generates revenue?
iPad, iPhone.
Exactly. Yeah. So this is, for example, the iPhone. Yeah, the iPhone or the iPad. Yeah. And they also have sales revenue related to services. What is this? If you think about Apple, what are the services they are selling?
Maybe the App Store.
Exactly. Yeah. Exactly. Or the things that have to do with the App Store, for example. So you see that most of the sales, they come from the iPhone and the iPad and all these kind of things, but they also generate quite a chunk of their revenues with the services. Yeah. So then we have cost of sales. Yeah. This is the costs that are directly related to the products or the services. Yeah. So this is the costs directly related to the product or the services. Yeah. And here, this is the gross profit. Yeah. Gross profit is the sales revenue minus the cost of sales. Yeah, this is gross profit. Yeah. They call it gross margin. Yeah, this is the gross profit, and you can also calculate a percentage of total sales. Yeah, you can say, okay, our percentage margin, gross margin, as a percentage. Yeah, generally margin is a percentage. Generally margin is a percentage. I don't know why they call it margin, but I understand margin as a percentage. So if you divide these 98,392 divided by the total sales, so here, then you have a margin of 73.88%. Yeah, which is you divide this, the gross profit, by the total sales. Yeah, divide that by the total sales. Yeah. So what else do they have? They have certain operating expenses. For example, research and development. What is this? What is research and development? In the case of Apple? Yeah, very good. So they develop a new iPhone. Yeah, so that costs money. Good. Then we have here what they call selling, general, and administrative expenses. What is this, for example? Any idea?
Transportation expenses.
They're very good, yeah. So it has to do, for example, selling expenses can be transportation expenses when they ship something to the customers or whatever. Or also, this is selling expenses. And when we're talking about general and administrative expenses, this is, for example, the salary of the CEO. Yeah. Yeah. So this is about transportation, but also about the salary of the CEO. This is not selling expense, but this is general and administrative expense, because the salary of the CEO is not cost of sales. It doesn't have, it isn't directly related to the product. Yeah, because the CEO does not only work on the iPad or on the iPhone. He oversees the whole company. Yeah, so that's why the salary of the CEO is selling, general, and administrative expense. So we have total operating expenses of 34 billion, and we have an operating income of 63 billion. Yeah. We can also calculate the operating margin. Yeah. So the operating margin is operating income divided by sales. Operating income income divided by sales, by net sales. Yeah. Divided by net sales. So can you calculate that? The gross margin as a percentage was 73%, 73.8%. So can you calculate the operating margin? Do you already have a result? Calculate it with your calculator. Operating income, yeah, divided by total net sales. What is this? For 2019? Exactly. About 24.5%. 24.6%. So yeah, very good, Ray-Chan. And is this good? Is this a good number for Apple in 2019? Operating margin of 25%? Is this good? It's good. It's very good. Yeah, it's very good. And if we go a couple of lines further down, yeah, we have other income, yeah, or rather, other income, and we have this is other expense. Sorry, and we have a provision for income taxes. So this is the income tax, and here we have, this is also called the bottom line because it's the bottom line of the income statement. We have net income. Yeah. And we can also calculate the net profit margin. Yeah. We talked about this today. Yeah. The profit margins. Yeah. Yeah. Do you see here? These are the profit margin. Yeah, we calculated the gross profit margin, we calculate the operating profit margin, and now we are calculating the net profit margin. You see that?
Yes.
Can you see the slide on your? Okay, good. So and now let's do that for Apple too. Calculating the net profit margin. Net profit margin. We do it for 2019 again. Net profit margin or net margin. Sometimes they call it net margin, which is net income divided by net income divided by total sales. If we do that, net income type it into your calculator for 2019. Net income divided by total net sales. What do we have here? Okay, Liang says 21.2. Let me check that. Yeah, very good. So this is 21.2%. And this is good, Liang? Yeah, it's good. And here, what you see here is earnings per share. Earnings per share. And what earnings per share is, you take the net income, here, this is the net income, and divide it by the number of shares outstanding. Yeah, if you look at here, here are the number of shares outstanding, and earnings per share is net income divided by the number of shares outstanding, and then you get the earnings per share. Yeah, this is earnings per share. Yeah, and here you see, when you look at here, generally all the numbers are in millions. Yeah, so for example, this is in millions. It's 213 billions in total. Yeah, because it's 213,000 billions. Yeah, so this is 213 billions. Yeah, but here it says except number of shares, yeah, which are reflected in thousands. Yeah, so if you have this number here, if you have this number, this is in thousands. Yeah, so you have to add three zeros. Yeah, so it's thousands. 1, 2, 3. And here it's the same, so on. Yeah. So this is earnings per share. Can you look up what the share price for Apple is in US dollar currently? Can you have a look? You're connected to the internet, and have a look what the share price is today. Apple share price. Type in. Go to Google and then type in, or whatever search engine you use, and then type in Apple share price. Did you find the Apple share price? Exactly, Liang. Liang says it's about 370. Very good. So this is the share price of Apple. The share price of Apple. Share price is 370. Yeah, 370 US dollar. So try to calculate the price earnings ratio. What is the price earnings ratio? Look at the slides, how to calculate the price earnings ratio. Price earnings ratio. What is the price earnings ratio? Very good, Jan. Price per share divided by earnings per share. So price per share, as you found out, is 370 US dollar. Earnings per share is, we take the diluted number because that includes all the shares that are owned by management, things like that. So that's the better, this is the better number. We take the diluted and not the basic. And the earnings per share is 11.89 in 2019. This is what Apple has earned in the last year. Yeah, Apple has earned in the last year 11.89 US dollar. Yeah. So what is the price earnings ratio? Calculated, you said, Liang, it is share price divided by earnings per share. So then do that and tell me what is the price earnings ratio. Okay, Liang says 31. Let me check that. This is correct, yeah? This is 370 divided by 11.89. Yeah, and this is about 31. 31.1. So my question to you is does that mean, is Apple, the stock, expensive, or is it cheap?
Expensive.
Yeah. I would also say, Raychan, I would also say it's expensive. Yeah. So because if you look at the stock price of Apple, maybe you have a chart or something like that. If you Google it, it has risen in the last couple of years and months. Yeah. So it has gone up. Yeah. It has gone up. Yeah. So it has gone up, and that made the price more expensive. And if you relate it, if you divide the price by the earnings per share, you get a relatively high number of 31. Yeah. And yeah, we said when we talked about the price earnings ratio, when we talked about the price earnings ratio, we said 10 means it's relatively cheap. Yeah, 20 is more expensive. In the case of Apple, it's 31. So that means probably the price has increased. Yeah, what could be the reason why it's relatively expensive? What do investors, do the shareholders probably think about Apple? Do you think the shareholders, do they think it's a good business or it's a bad business? Yeah, they think it's a good business, and that's why they drive the stock price up. The stock price has increased because they think it's a business, and why it should be expensive. Yeah. So if you think about buying a share, if you think about buying a share, better is, or is it better is expensive? It's better if it is cheap, yeah, because if you want to buy something, you want to buy it cheap. But unfortunately, Apple is not that cheap, yeah, because the expectations of the investment of the investors are relatively high, so you only get it relatively expensive. Yeah, so you cannot buy it really cheap. Yeah, you cannot buy it really cheap. So let me have a look at. I have a couple of exercises. By the way, I can send you these exercises. So via chat, can let me. I send you these exercises via the chat. So these are exercises we go. We talk about, but we do that together. Yeah, and if you please have a look at attached financial statements of Apple. Please tell me about the profitability of Apple. Yeah, we already talked about this a little bit. Yeah, and the financial position. Yeah, this is we talked about a little bit about the profitability. Yeah, Liang said this, that it's quite good. Yeah, and Ray Chan. Yeah, you said the profitability is quite good. The net profit margin and the operating profit margin are very good. Yeah, at least in the last year. Yeah, we talked about it. We looked at it. For 2019. Yeah. What about it? What about if you look at 2018? What about 2018? Yeah, this is 2018. Was it also good? If you look, for example, to the net income, how did it develop? How did it develop over time? How did it develop over time?
Up and down.
Again, Ray Chan, what did it do?
Up and down.
Up and down. Okay.
Yeah.
So generally, you can say in all these years, Apple was quite profitable. Yeah, you can calculate the net profit margin for all these years. Yeah, we said in 2019 it was 21%. In the year before, it was probably even higher. Yeah, you can calculate that. You can take the net income and divide it by total net sales. Yeah, and then you will get a net income and a net profit margin of even more than 21%. And can also do that for 2017. But generally, over time, you see that Apple is quite profitable, so they make a high profit. You are right, Ray Chan. They said it went up here and then it went down a little bit, but it's only slightly down. Yeah, it's only slightly down. It's only slightly down. So generally, it's a very profitable company. Yeah, so generally, it's a very profitable company. And if you look at the shares outstanding over time, what happened? What had happened to them? Go down. Yeah, go down. Very good. What does that mean if the outstanding shares go down? What did they probably do, Apple, over time? Why do the shares go down? The shares outstanding. Let's ask it this way. What do you do? What does a company do if it wants to have more shares outstanding?
They want to, yes.
So they issue new shares. Yeah, they issue new shares to the public, and then they have more shares outstanding, and then they get money into the company. What does a company do if it has fewer shares outstanding over time, as is the case with Apple? What do they do? They do not issue new shares, but instead, what do they do?
And maybe the share price is lower and lower.
No, it's not about the share price that is lower, but it's about the company, about Apple buying back shares. So they buy back shares. Yeah, they buy back shares. They are buying back new shares or shares generally. They are buying back shares. They engage in buybacks. Yeah, they are buying back shares, and that's why there are fewer shares outstanding, because Apple has bought them back. Yeah, and if you look at here, if you look at earnings per share, you calculate earnings per share by taking the net income. and divided by the number of outstanding shares. So what happens to earnings per share if net income stays the same, but earnings per share goes down? What happens? But number of outstanding shares goes down, as is the case with Apple. In the case of Apple, number of outstanding shares goes down. What happens to earnings per share? It goes up, yeah? And it makes sense because that's why the company engages in buybacks at all. It wants to do buybacks because that means that the earnings per share increase at a faster rate than net income. Yeah, or if net income increases, as is the case in the last year, then earnings per share does not decrease as fast. Yeah, because you have a higher number of outstanding shares. Yeah, does that make sense? Yes, clear. Okay. Why they buy back shares? Raychan, you've asked that, or is it clear?
Clear now.
Clear. Okay. All right. So let's look at our exercise. We wanna look at the profitability of Apple. We already said something about the profitability. We said it's quite profitable. Yeah. Then we wanna look at the financial position. Yeah. So what about the financial position? And then we also want to have a look at the statement of cash flows. And does the firm generate a lot of cash? Yeah, and where does the cash come from? This is exercise number 3. Yeah, so exercise number 3 is about the financial position. Financial position means leverage. Yeah, does the firm has a lot of leverage? Does the firm has a lot of liability, or does it use predominantly equity? And statement of cash flow is about cash. Yeah, whether you want to know whether Apple really is generating cash. Is it only net income, or do they also generate cash? Yeah, and then the fourth exercise is about the payout policy. Whether Apple pays a dividend, we have to look at that. Whether Apple pays a dividend, and whether Apple buys back own shares. Yeah, and this is, we already talked about the buybacks. Yeah, we said, okay, Apple is buying back shares, and that's why the number of shares outstanding is going down. Yeah, the number of shares outstanding is going down, and you see actually the earnings per share. Yeah, the earnings per share, how they develop. They develop more favorably than net income, actually. Yeah, so do you see that? Here, for example, net income went down by quite a bit. This is about 10%, but the earnings per share went down only very slightly. Yeah, and this is because of buybacks. Yeah, diluted means, Raychan, that it also includes the shares or the options that are owned by employees of Apple. Yeah.
Hey.
Diluted means also shares owned by the management or options owned by the management are included. So diluted is the better number. Yeah, I always take, if you have basic and diluted, always take the diluted number. Yeah, but you see here that earnings per share, actually the development over time is more favorable than net income. Yeah, and this is because of because of buybacks. Yeah. Yeah. Because here you see how earnings per share are calculated. You take the net income, and then you take the average number of shares outstanding. And if they go down, yeah, as is the case with Apple, yeah, then earnings per share actually develop more favorable than net income. Yeah, does that make sense?
Yes.
Yes. Okay. All right. I would say we make a short break, but during the break, you can already think about the second exercise, the financial position of Apple. Yeah, the financial position of Apple. What about the liabilities? Do they have a lot of liabilities, Apple, or do they use predominantly equity? And we will answer this question. We will talk about this question together after the break. Let's do a break of, I think 5 minutes is enough. Yeah, let's do 5 minutes and then go back and talk about the financial position. So see you in 5 minutes. Okay.